Outlook Business Investment Summit 2021 is brought to you by ICICIdirect.com.
Welcome, ladies and gentlemen, to the next session of Outlook Business Investment Summit. We have with us Harendra Kumar, Managing Director, Institutional Securities, Elara Capital. He has more than 25 years of experience in the industry, tracking capital markets, and he's been a regular writer in the My Best Pick special edition of Outlook Business with a stellar track record. Thank you so much, Harendra, for joining me on this discussion today. Please go ahead. You can present your investment case.
Thank you, Mahalakshmi. The idea that we have selected is Balrampur Chini, and I think what it has is many triggers for the story that is unfolding for the company as a whole. While many people just focus on the company, we would like to start up with the top-down approach to why the triggers are going to be long, enduring, and sustainable. It comes back from, what Mr. Modi has set out as doubling of farmers' income. Right. If you understand, 2 or 3 big states like Uttar Pradesh, Maharashtra, and Karnataka have a lot of sugar farmers, and they are a very large political constituency. And what we've seen over the years is that, you have this cane pricing that goes up, then there are arrears, and there is a continuous, a cycle of, good debts, bad debts, and that's how these companies would operate. That is one issue. Number 2 is, the government has a very large import bill in terms of crude oil imports. And then in the second term, the government has given a clarion call of Atmanirbhar Bharat, where we are looking at, reducing our, import dependency on different countries. So you put these two together and you see that the government has come up with a phenomenal biofuel policy. Which basically says that, the oil marketing companies will take X number of ethanol from sugar companies and blend it with petrol and sell it. So here you're coming of 2 strategic objectives of the government with one policy. And this is just the beginning. So the policy was rolled out a couple of years ago. And you are seeing that the industry is adapting to this change that the government has put forward. So this is the overall construct of what we're going to see over the next 10 years as an enduring policy and change for the sector. So number 1. Coming to point number 2 is you would always seen that the sugar cycle used to go up and down with level of sugar production. You had boom years where sugar would go up, your inventory would build up and prices would correct. So you had these cycles which were going up and down and the prices would also reflect in a similar fashion, the stock prices. So what this new ethanol policy does is it takes away a certain portion of the sugar and gets diverted towards ethanol, where you have, a guaranteed offtake by the OMCs. So the inventory, which used to play a large part of the cycle now becomes a non-variable. It is not such a big variable. So the cyclicality of the industry goes away, number 1. Number 2, obviously this is very good for the farmers, because the sugar prices eventually will go up with lower inventory, and the sugar companies will get an additional revenue stream. Now the beauty of this is the policy has been designed that the break-even for a sugar manufacturer who's producing ethanol is 2 years. So this incentivizes sugar mills to go out and produce, set up ethanol plants with very aggressive blending targets. One is 2022, 25, and there's 2030. Right. Initial 2 years, a lot of companies are circumspect whether the government will honor its word. But over the years now, they've seen is that the OMCs have done a guaranteed offtake for the next 5 years. Now, this has brought a lot of confidence into the sector and many people are investing towards this. So what you're going to see is now a normalized inventory cycle, which used to play havoc with the sector, bad debts, arrears, etc., which is going to get normalized. You're going to get an additional revenue stream, which is higher on margins, higher return on capital employed, right? And given that the inventory is going to be low, the returns on sugar are also going to go up because the prices are likely to remain firm. So erstwhile sugar companies, which are cyclical, now become steady compounders, right, over the next 3, 4, 5 years. So this is just the beginning of the cycle, and this has a long way to go from here.
A few questions come to mind, Harendra. One is that How credible is this change that we are talking about? You're saying that this whole industry driven by government regulation is moving from being a cyclical industry to a structural change. How much credibility do you give to the changes that are brought in by the government first?
Correct. So this was, this is a very good question because this is what all the investors had in mind when we started talking about the company. And credit to the government that they have, played their part with a very good policy, and they have pushed the OMCs for the offtake. So even in terms of payments, the governments are on time. The offtake is on time, and there is no policy flip-flop. Now that the new government is going to continue for another 4-5 years, so at least you know that visibility is going to be there. The offtakes are happening, the blending is happening, and there is zero hiccup. So it's only now that the confidence of the players have come in that we can go and set up new ethanol plants. So prior to this, only a Balrampur Chini, which was cash rich, or some of the other players had expanded capacities. Now is when the industry will start to catch up and set up more capacities.
That actually brings me to the next question, which is, there is a lot of capacity, sugar capacity, mill distillery capacity in India, which means that, and this sector has been ailing for quite some time because of all the, government policy with respect to exports and minimum support price and all of that. Now, everybody looks at this opportunity, and you also have mentioned that the margins in this business are fairly high. The ethanol margins are in the range of 40 to 50%, and new capacities take about 2.5 years for a payback. What is the risk to ethanol pricing, considering that so much capacity will come in? And secondly, can you give some insights into the price discovery for ethanol itself? Right now, I presume it is determined by the OMCs and they get into long-term contracts, and the government pegs the price. What are the downsides to price and profitability in this segment?
Okay, so Mahalakshmi, whenever the government fixes policy, and it's very typical to a power sector, utilities, they work not on an absolute pricing mechanism, but on a return on capital employed. So they expect that, what is a reasonable return on equity that a industry is what we can offer, and which makes it viable for companies to invest in this space. So what they have done is, so the pricing is always reverse calculated.
Right.
Right. So in terms of what they would have in their own wisdom come up with a return on capital employed of 40-45% to incentivize quick capex cycle. Right. So a lot of people will come in, they will see the money and they will invest in the sector. Right. So that the government can reach its blending target of, 10% by 2022, 20% by 2025, and maybe higher. See, Brazil runs at 100% ethanol, but India has a long way to go. So as long as India's vehicle population and petrol sales are going on, the blending targets can keep on increasing. So currently it is very small number of 8% that is being blended. Then you add the regular 5-6% demand CAGR in petrol, right? And an increased blending target. So we don't see that this policy will undergo any change at least for the next 5-6 years, because the government has to give a long rope to this sector before they achieve their blending targets.
So are you assuming that prices will remain stable and these kind of return on capital employed can be maintained over the next 3 to 5 years?
Yes, because it's not what you're giving, because it's a very small sum that you're giving to the sugar sector, but what you are gaining in terms of import, substitution, in terms of reducing the volatility, in terms of getting substitutions within India, and what you're doing for your farmers. See, you're writing off debts, plus the political risk that you carry because of the volatility. You're eliminating several things, right, at one go. So it's a small price to pay to sugar mills with wide varied benefits. So I don't think any political dispensation will change given the benefits attached to this.
But Harendra, tell me, if the solution was so simple, why is it that it has taken so long for any government to recognize this?
So, I think it fundamentally comes from the context of, a headline target that the government had of doubling of farmers' income. I don't think that people ever thought that we wanted to uplift farmers and double their incomes. So if you see, the underlying change has been that the government is saying, unless I put in certain capital, there is no return on capital from the farmers. So over the last 20 years or 30 years, the farm sector has been extremely underinvested. Right? It is only over the last 4 or 5 years that people are saying, I need to give more in terms of fertilizers, more in terms of insurance, more in terms of certain policies, and then you get a return. Without investment, you don't get a return. I think that's the fundamental change. Number one. Number two is you don't have one, golden arrow that I'm going to resolve all the farmers' issues. So there is a lot of this, small initiatives like the fisheries, teak farming, bamboo farming, poultry, this biofuel. So there are several initiatives around this which are looking to double the farmers' income. So there is a holistic headline thought, and there are these micro measures that the government is doing.
So the final question of valuations. So on what metric and what, how do you value this company? And in the historic context, where does this valuation really sit? Are you looking at earnings or EV by EBITDA or whatever?
Yeah. So Mahalakshmi, my fundamental view is there is only one valuation matrix. It's basically 10 blind men and an elephant. And, you look at one variable and you put different variables around it, be it PE, EV by EBITDA. So my fundamental premise is you get a value for a company, and there are other all ratios are ways to interpret that value. Right. So what is fundamentally changing is from a cyclical company, it is becoming a structural company. Right. So the sugar companies, metals, etc., trade at low P's. Even on high earning cycles, they trade at low P's. On low earning cycle, they trade at high P's because of subdued earnings. What this will change now, because the earnings will become sustainable and enduring.
Just to interrupt you, so when you say that this is moving away from cyclical, what kind of revenue contribution are you seeing from the ethanol business as opposed to the sugar contribution in the overall revenue?
I think it is small. It is around 20%, right? Around that much. It will keep increasing, right? Plus you will have cogen, plus you will have, they are using a different rice way of making ethanol as well. So that whenever they don't have sugar, so the companies will find ways and means to get the ethanol business going, right? Sure. So the ratios will change. The sugar business per se will not show high growth. Rest of the high return on capital employed will come from the ethanol business.
Sure.
Right. So what it is doing is the company's ROC is moving from, maybe 16, 17% to 22%, right? So it is getting a spread of possibly 7 to 8% on its cost of capital. Right. Sure. So I would assume that the company which is possibly trading at 2 times price to book now, right, over the next 3 years should start to trade to 3 to 4 times price to book, given the high return on equity and high return on capital employed and sustainable earnings. So the risk which was priced into a cyclical stock, maybe, and that's why it was trading at mid-single level P's, will start to go away.
Sure.
So I would guess that, possibly at 250 rupees book value, you should trade at 500, maybe 600 rupees the stock.
Right.
If all the things that we are assuming play off, right? And given the pedigree of the management, the track record of buybacks and, long cash flows, I would say, it's a very safe wager at the moment, given the construct of the macro.
Right. Tell me, the floor for this stock is already set at 180, which was the buyback price. And I presume it's 70, 80% or maybe, I don't know, double of that right now. So is that a good entry point, considering that you've already run up in 1.5 years from, 100 to wherever we are right now?
I think this is the beginning. What it does, I think people have to understand is the stock has been in a consolidation phase for 10 years.
Right.
The price is only a reflection of the underlying fundamentals, right? Which meant to say that the market was not seeing anything new in the company. At around 220, it breaks out of a 10-year zone, right? So this is shifting orbits. When you shift orbits, the possibilities are untested, right? So, and it is obviously an appreciation. The market is recognizing that something dramatic is underlying is changing, right? So generally people get really worried when stock prices break out and they double. The thumb rule should be buy at new 52-week highs because historically stocks go on to set up new 52-week highs after that.
Right.
It is a reflection that something big is changing in the stocks, right? And you could see this in numerous number of stocks in the market today, Balrampur Chini being one, right? So you could time it, you could wait for it, but the point is you could miss out on a larger rally.
Sure. Final question. There are a whole bunch of sugar stocks, which, if we were to just go by this theme, the whole sector could be interesting. And would you suggest a portfolio approach to, usually a portfolio approach sort of minimizes or optimizes your risk when you're playing a theme? Is that a strategy that you would propose, or stick to the...
So yeah, we've seen it many times in the past, right? So typically the main company of a sector will start to rally and re-rate a lot. You see that in Tata Steel now. You're seeing that in Balrampur Chini, in the sugar space. The tail will contribute. There is no two ways about it, right? So you will have you've seen people, there is a Dwarikesh, or there is the Sri Renuka Sugar. Bajaj Hindustan attempted to rally, right? But that is bereft with risk. We don't know what the managements are thinking, how they will participate, how they will do, right? So as a portfolio, the best stock, yes. As tactical, allocation, you could possibly pick a few, maybe a couple of more, right? And I'm sure they will also pay off.
Sure.
Right, but that you need to be quick in your entry and exits while you could hold on to your portfolio stock.
Sure. Thank you, Harendra. It was really insightful. Thank you so much. And it's a refreshing change from all the themes one has heard of, and especially in times like this where people like to play it safe, look at more predictable earnings, etc. This transition story is particularly interesting. So thank you so much.